Hello, folks. Bill and Brian here with Here's Your Rogue. Brian, roll the logo. Hello, folks. Hey, Brian, you know what I hate?
What's that?
I hate when you get on a podcast and people are very obvious about their product placement.
I hate that too. It's really annoying me. It really annoys me, especially when people kind of put it in your face,
Oh,
and
exactly.
just
You know exactly what I'm talking about.
they're just really pimping their stuff. I mean, I don't understand that. I don't get that at all. You
Oh,
know,
man, I tell you what. You know, we love you guys. We actually have merch, so you can actually let us know. We'll send you a link to our store. But today we're talking about some crazy pricing that's going on. At least it seems crazy till we start looking at the fundamentals.
and
I
the
know
traders are burning it to the ground.
I love the smell of napalm in the morning.
that's right.
They're taking it down.
But you know what, Brian?
What's that?
There's no crying in baseball.
But
So
be careful, bulls just waiting and waiting and waiting because you might get burned and you might, yeah, this thing might take off. All because
All because you want to save a couple extra pennies.
that's right.
just just our 2 cents. We're not financial advisors. We do
We are
not.
not financial
We
advisors.
express our opinion, and it's our opinion, and we are not. What you do is your business. If you want to reach out to us, we advise multiple clients on multiple trading positions, acquisitions, divestitures, all that stuff. If you want to connect with us, our information should be down below. But anyway, disclaimer over.
Disclaimer over. All right. So talk to me. Why are we seeing crude sort of drop off today?
Well, we've seen both crude and natural gas. These are the strip prices. So this doesn't take a look at the front month, but this is based on yesterday's close, which today's close is going to be a little bit worse. 2023 is now below $4. 24, all of these on natural gas is because we have had super mild winter weather, warm weather. Europe has had record heat, and crude is going down. The interesting thing, crude has gone down. Let's take a look at it. So since November. So in November, we were up above 90, and we have just been on this down track. We did kind of bottom out at 70, and we're trying to go back here. 76.26 is a key point. But what's interesting is the entire news cycle since November has been the same three headlines. That's it. You have different flavors, but it's COVID concerns in China, recession concerns, demand concerns. All three are interrelated. And realistically, when we look at the supply demand balance in the US as well as the world, we could go through 6 months of a depressed economy and still be short.
Right.
Now, or said a different way, if we are in a recession, that's backward looking, meaning we've already been there and we're still pulling barrels out of storage. So that tells the supply demand is imbalanced to where demand is higher in a sluggish economy. So that's
Plus,
that's my assessments.
SPR was supposed to stop at 180. I think they're approaching 200 right now.
Well, one of the things that we've recently taken a look at is we took a look at rigs. And
Right.
this is something that I don't want to beat this down too much, but from the COVID trough, we're up to 700 rigs. Oil production continues to well, it continues to rise, but not much. Here's what's interesting. When we look at the shale oil decline, it's almost 600,000 barrels a day that we have to replace every single month. And when we look at the production per rig, not this, the new production. So let's take a look at this. This we're covering that 600,000. So that means we're adding maybe 100,000 barrels. What people are missing, not capturing is if we stop drilling today, we're just going to get shorter and shorter and shorter. And that's 600,000 barrels a day. That's like a 40% annual decline. So if we're producing 10 million barrels, we would be at 6 at the end of the year if we did nothing. Now,
Let's talk about a reality situation. What if we just stopped drilling and didn't stop drilling, but reduced drilling to where we're only uh, producing an extra 300,000 to 400,000 barrels a day? That means now we're actually losing on that while demand is still going up. Demand has not backed off all that much.
I mean, if we decline every month by 300,000 barrels by the end of the year, what is that? 3.6 million barrels.
Yeah.
So we're going to go from 12 to 9, 8. I mean, and that's big. And when we take a look at that, and by the way, when we do this show and tell, all of this is on our flagship product, Rogue Edge. It's $89 a month. Sorry, inserting a commercial because I hate those guys that kind of pump their brand and pump their product. But all of this is available to you for $89 a month, and it gives you supply, demand, information on technicals, so on and
That's
so
right.
forth.
So Rogue Edge gives you the edge on the marketplace.
Only $89 a month. You can't find that price anywhere, and
Yeah.
I'll stand by that. We're going to save you money. Thank you, Mattress Mac.
There we go.
So if we take a look at it, our total crude supply is 14 million barrels. That's because we're importing above and beyond the 12 million that we are producing. We are importing 6.25. We are exporting 3.4. Now, those are different barrel types. That gets a little deeper on some of the
Right.
crude
Some of that's
stuff.
some that's refined
Again,
product.
reach out to us if you want to understand the reasons and the rationale. But we're filling 16 million barrels a day in our refining inputs. And I haven't looked recently, but that's probably at a 95 to 97% capacity utilization. So if our production declines by 3 million barrels, where is that going to come from? A lot of people say, well, that means OPEC's going to expand. A few looks at a couple of charts, and you'll realize there's not a lot of spare capacity to be had, except for Iran, and that depends on any
And I'm not sure I can believe the Iran information either yet.
Yeah, well, and the thing is that I don't. That's maybe going to add 1 million barrels a day to the overall world global balance, but that's what we're seeing. So fundamentally, we have no reason to be bearish. The market is spooked. The traders are spooked, and that's why we're going down. But those 3 data points came out in November. Those 3 data points as far as China, concerns about China's COVID restrictions, demand concerns, and recession, which are all interrelated. It's really related around the same thing. And the fact of the matter is, China's been easing their concerns. We have had sluggish economy over the fourth quarter, and a lot of the reports aren't out yet, but a sluggish economy. So our supply demand, we're still taking barrels out of storage in a sluggish demand. I would hate to see it in a healthy economy. So my opinion is it's bullish. We may have to wait for sentiment to turn for the actual financial commodity to be lifted
So
up.
what happens when the government stops pulling out of SPR and starts buying to refill it? So
Which I haven't seen news. I know they held the RFP. I don't know if they've awarded anything to buy back
I
3
haven't seen
million
any
barrels
award
a
on that.
day. 3 million barrels a day in February. So we're going to have to see that, because they still, I mean, here is the other reason that we say this. Everybody looks at the commercial crude stocks. Yeah, it's low, but it's still tolerable. But the SPR stocks are at the lowest level. We played this exercise.
Yeah.
I think
Keep
our
going.
data.
Keep
I,
going.
I
Keep
think our data
going.
runs out. I think we start in 1990. It's 1984. Our
Right.
data starts in 1990. But this is the chart that looks at crude and total products. When we take a look at this, this means upstream of the refinery, the commercial crude stocks, SPR, downstream, motor gasoline, distillate, diesel, all of those products. We are at the lowest level. Let's see if we can find when the last time we were at this
No,
level.
you go back to the 80s again.
Probably. Oh, let's see. And see this on Rogue Edge, you can actually interact with this product. So early 2000s. So early 2000s is when we were around this level, 2004. So if we go back in time, in 2004, what were we producing? 2004. Let's see. We were producing no, that's 2001.
Yeah.
5.3 million barrels a day. So now we are a significant portion of the international. Did you see the interactivity on that chart? I'm just curious if you saw.
You too can have this interactivity with Rogue Edge.
Anyway, I'm going to stop talking because we have been talking a little while.
Right. So
But
the fundamentals are still out there. What you got is some traders who are trying to, start the year by making their, all their year profit in January. And so volatility is their friend. If you are an end user or producer, volatility usually is not your friend. What
Yep.
you're looking for is something stable. So that's what we see on crude oil. And to be honest with you, natural gas is not much different. It's got pretty much the same story, other than we're at
it's
the
over 3 BCF a day that we have to replace every single month. Now,
right.
it's a game of musical chairs. As long as the music's going, everybody sees, well, we've grown 600,000
Right.
MCF since last month. Well, that's because that means we actually grew 4.2 BCF a day
Right.
because that new drilling is replacing 3.6 BCF a day. So that's the thing you got to remember. You got to take a look at, because that means as long as the music's playing, there's not a problem. But we've been in this business a long time. The music doesn't always play. So
Watch out for in your ear.
yes. Yes. And now I will say we have been bullish and it's been going down. And that's the thing. We're not going to be able to identify all this. We're not financial advisors. We're not trading
Right.
advisors. We do offer that to our clients as a perspective point for their positions. But I think it's fair to say both Bill and I, when we're looking at 2023, are looking at the market this way.
How much you want to make a bet I can throw a football over the mountains?
And that's
That's
what
right.
that's kind of what we think. So
Oh, it's much easier to be bullish when the prices are low.
Yep.
And so as my friend Scott commented to me, he says he liked my comment when I said I'm wrong for all the right reasons.
Well, listen, here's the thing. I will say, last plug for Rogue Edge, but the other thing is we do have a community of people, and we share this and interact with our customers. And we have, as much as Bill and I are bullish, all of our data is available to our customers. Some of our customers have very bullish, very bearish opinions. So the thing is that
Using the same data.
what we're advocating is look at the data to figure out where you stand, because everybody should have kind of an idea in their mind. And we're not saying, well, look at this, it's going to be bullish and look at us because we're right. We're saying, look at the data and make data-based decisions. So we're here for you. Drop us a
Right.
line. There's an email down below, and I'll put in the comments. I don't think I put it in the description. I'll put in the comments. If you want to schedule a 30-minute tour, I will put a direct link so that you can schedule it, and we will give you a 30-minute tour of Rogue Edge. Or if you just want to talk about the markets, either way, just let us know. So,
And by the way, if we were right all the time, in the background you would see a Caribbean beach. I promise you.
instead, I got a couple guitars.
Yeah, there you go.
That's what I can afford. So, anyway, hey, listen, thanks so
Hey,
much.
listen,
Happy New Year.
Happy New Year. You guys get out there and let us know what you think.
Yep. Thanks so much. Drop us a comment and then let us know. Be sure to like and subscribe. So,
Okay.
I had to say it. I had to say it one time. So
Yeah.
anyway, enjoy the new year. Reach out to us if you have any questions. Thanks so much.